From Germany, here's Pascal. It is Wednesday and we have some economic news today. At first, we will see today in about 15 minutes some important news, and later the day we will have Jerome Powell testifying again. And we will have some job news today before we see non-farm payrolls on Friday. So let's start right away with our Nasdaq future. It was testing the lows from yesterday and pre-market again. So we had lower lows here during the Asian session. Lows were about 12,138 points. But you see this important Fibonacci level here is still in place. It's the 50% Fibonacci if we look on a day chart here. The high point from March 6th and the low point from March 2nd. So these 3 days, if you put the Fibonacci level there, we have the 50% retracement where we got rejected yesterday and today again. So let's see if with all the major news these levels can hold. We are turning higher right now. Pre-market session began. So let's see how the news will be. I will just bring up the news here. Let's see this. So we had a GDP in the Eurozone here of 1.8% instead of 1.9% for the fourth quarter. And in 11 minutes, ADP non-farm employment change will be out. Expectation is 200k, which is higher than the previous 106k. But as you can remember, the previous non-farm payrolls were a lot higher than expected. And therefore this is an early measure of the non-farm payrolls for Friday. So we can probably see what will happen here when the news are out. But the forecast is pretty high. If we go a little bit in depth here, then we will see the number is high. And at 10 a.m. we will have again Jerome Powell testifying and Joel's job openings, as well as crude oil inventories like every Wednesday. So here you see the previous numbers. 200k is one of the higher ones. So we had 235 and 239k, but 200 is one of the higher expectations. If you can look back here, 178, 150, 200. So 200 is one of the higher numbers here. So I'm curious how the outcome will be. If we will see a lower than expected number, then this is probably good for the stock market. And if it's higher or a lot higher than expected, then that's not good for the stock market. Okay, that's for the news, but more important probably will be on Friday. Here, the non-farm payrolls. It's about the same number, but a little bit, the measurement is a little bit different here. Like ADP non-farm employment change. So we will have non-farm payrolls on Friday. And this number today can be taken as an early indicator for Friday. Okay, let's see the important levels today. So the high point from pre-market was 12,216. And if we go on a higher time frame here, like 15 minutes, we can see that we had a lot higher levels yesterday. So the Fibonacci level is sitting around here, 12,230 points. And we see this was also an important level yesterday. We were trading a lot around this level of 12,230. So this can be a major level if we go to the upside. To the downside, the pre-market lows and the lows of yesterday should be important, 12,142 points and 12,138 points. So let's say 12,140 points is the interesting level here on the lower side. We shouldn't close below here on a 15-minute time frame, or we will see lower levels. Let's see this on a daily time frame. So here we have the next level, 12,060 points. This is the 61.8 Fibonacci from this up move here. So we are just looking where can the support level be from this previous up move. You can also use this bigger move here, this down move. So you would have another Fibonacci retracement if you go here from the low point to the high point. You can also use this as Fibonacci, so you will have some more levels, and you clearly see now we have two lines here right at the 12,060 area. So it of course will be an important area, because no matter which Fibonacci you are using, you will see that there should be some support in this area right before the important 12,000 level. And therefore, if we go to the downside, 12,060 points in March future will be important for Nasdaq. To the higher side, we will have the the opening price of yesterday and the closing price of the day before yesterday, 12,320 points, and the high point of yesterday, of course. But yeah, I don't think that we will go there right away, but never say never. Everything can happen with the news and Jerome Powell speaking today. You can see this nice doji candle here. This indicated already that we will pull back yesterday. This was a nice hammer last Friday, so we had more buyers coming in here on Monday. Tuesday, this sign of a reversal here, and then the sell-off yesterday. But if we will take out all the Fibonacci levels, then we can see we are trading right at the exponential moving averages. So the 20 EMA and the 9 EMA are sitting here. They can also act as a support and can push the prices higher, because parabolic is now below the chart. As you can see, the parabolic dots here from parabolic SAR are below the chart and indicating an uptrend. And the ADX is about to cross here, so it has already crossed. As you can see on this candle, we had the crossing here. So it's really rare that we see at the same time the parabolic and the ADX. So two signals showing that there will be more uptrending. It's not a strong trend. As you can see, the red line is far below the 20, but it's an uptrend. So we just have to wait for the bulls to come back here. And it's not looking too worse for them. But yeah, we have to be patient with all the news. A lot of movement can happen here today. Let's see some other important thing like FedWatch tool. FedWatch tool, we had a lot of changes yesterday. We have seen during the live stream, but look at the numbers at the end of the trading day. It was just crazy. 78% are now expecting a 50 basis points move. It was about 50-50 when we ended the live stream yesterday, and it is now 78% for a 50 basis points move. So there is big fear in the market. We currently cannot see this in VIX. So if we are looking at the volatility index of S&P 500, we just see 19.8, so still below 20. It's a low number. It's, in my opinion, a lot too low. But we already see a low put-call ratio. And a low put-call ratio of VIX, what does this tell us? This tells us that a lot of people are buying calls. So they want to be secured if the implied volatility is rising. So if the fear is coming up, they want to be secured. And therefore they are buying VIX calls. And this is what the put-call ratio, a low put-call ratio, is telling us. If it's high, then a lot of puts are traded. And if it's low, then a lot of calls are traded. And this is what happens right now. A lot of calls on VIX are traded. So even if it's not rising right away, we see that there is a lot of amount of buying in VIX. And yeah, we clearly see this anxiety here of higher probabilities of higher interest rate levels. We now see that the high point is probably at 5.75%. So we also shifted here for the expectations for June until December to 5.75%. You clearly see 66% probability now and about 50% for the next meetings here. And the first drop is not before January 2024. Then you can see that the expectations are going back to lower interest rate levels. But yeah, of course, that's not good for the stock market, these high expectations for high interest rate levels, especially these 78% for a 50 basis points move. Let's see if the Federal Reserve will do this and what Jerome Powell is telling today when he testifies. So I think the politicians were talking pretty hawkish, but Jerome Powell was not. He was just neutral, I would say. But yeah, the market is taking it like it wants to take it. So never trade the news, just trade the direction. And yeah, we have to focus on our charts, especially if you are a day trader or a swing trader. Don't trade fundamentals, just trade what you see. And yeah, we have seen this yesterday. So I traded here to the long side yesterday. I was short before the meeting began, and then took profits. And here at 12,200, I took a long trade up to 12,259 points right here. I was out, so this was almost perfect. But yeah, the last long trade didn't get above the previous high point, so I had to sell it here before we went lower again. And at the end of the day, I tried to take another long here, because you see we made the day's low here, retested, and then we tried to push higher. So we had this parabolic change here. So we had the 20 EMA level here, which acted as a resistance, and then we went above, and you see the parabolic already changed to the downside, indicating an uptrend, but we only had 20 minutes left until the end of the trading day. This was not enough, so I closed this trade, break even at the end of the trading day. And yeah, I re-entered a long trade today, so at about the same level pre-market during the European session. So I'm about 30 points in the green right now, but yeah, everything can happen here with the news. So I'm prepared to be stopped out again, or just ride it to the upside. My next targets would be the previous high points here. So you can see these high points here from yesterday. 12,300 would probably be a smaller barrier. And then on a daily time frame here we see, if we use the Fibonacci levels again, then we see the next level is here, 12,235 points, and right above the 12,300 level, 12,330. This should be my main target here, the closing price of the day before yesterday. Well, you're looking at the parabolic on the daily time frame. Yeah, this is the parabolic on a daily time frame here. So you see it also changed to the downside, indicating an uptrend. So because of this candle here from Monday, we closed above the parabolic dot, and therefore it went to the downside, indicating an uptrend. So yes, the candle of Tuesday showed us a reversal. So you should have stayed cautious for yesterday, but it's still an uptrend. That's what the parabolic is showing us, and ADX is also showing an uptrend. It's not a strong trend right now, but it's still an uptrend. So this candle doesn't say we are in a short trend now. It's just indicating be cautious. A lot of buyers were on the wrong side on this day. We had a sell-off until the end of the day, and it almost closed unchanged, and then we went down yesterday. So now the news in just a couple of seconds. So let's go back to the news here and see what happens with Nasdaq on a 1 minute time frame. So news are out in 30 seconds. It's a 3-star event, but normally we don't see 200 points move. So 30 to 50 points would be a good move. But if the number is a lot higher or a lot lower than expected, then we can also see 100 or 150 points. But it's still early, it's pre-market, so not a lot of volume is here to push the market. Therefore, we will have to wait for the opening, and especially here for Jerome Powell and Joel's job openings. So the news are out. We had to push to the downside, just about 20 points here. Retested Fibonacci level. $242K, so higher than expected. Not really good for the market. Job market is really strong right now. So that's not a good sign for inflation. And probably the right answer is more expectation for higher interest rate levels. Yeah, it was 78, so we will have to wait just a couple of minutes, and then we can see if there's a further shift to these 50 basis points here. But like always, even if the news are to be taken bearish, we can see a change of trend right away. So always be cautious, don't hop on a trade right away. Wait for the market to find its direction. Give it some time, stay patient. So we retested the lows here, but of course we were at lower lows pre-market here. We talked about it, 12,140 points. Just redraw the line here. This was the low of yesterday. So this one should hold. If not, it's really a bit more bearish. 10 more points, but you see the bulls are already fighting back the levels here. Yeah, we can have a look at the commodities right away. Just let's see it as 1 or 2 more minutes here for Nasdaq if the bulls are able to fight back. And the same for ES future, for S&P 500. Let's go there. Where is my ES chart? Here. So the same here, we retested the lows. Let's see. So here we had lower lows than pre-market. So S&P again is a little bit more weak, is a little bit weaker than Nasdaq. So we had the same pattern here. This was a doji candle indicating that the Wednesday could be weak, and it was. So we just give up all the movement from Monday and are trading below 50 Fibonacci level. So if we zoom out a little bit, you will see. So this is the movement from January 6th to February 2nd. This was the movement, and we corrected more than 50%. We went down to 61.8%. There we could hold. Then we went back to the 38 Fibonacci level. And on Tuesday we weren't able to go. On Monday we weren't able to. Was it Monday? Yeah, it was Monday. We weren't able to go higher, and therefore we fell back yesterday here to the next Fibonacci level, 50%, and are fighting with it right now. This is right at the 4,000 points level here for ES future. So ES is a little bit more bearish than Nasdaq right now. So still fighting for the level here. Okay, we will wait for the market to find its direction. I have a small trade in the long position here. I opened at 12,150, so it's about break even now. I still have time to give it a little bit of room to the upside if it's working, and if not, I will be out of this trade. But it's just a small trade for my portfolio size. So let's move on with natural gas. Natural gas, May future. You can see, oh no, this is the option, sorry. I have an open short put. You can see here a 225 put, but the future price is here. So it went back 2.4% today, but yeah, yesterday it was able to rise. So we had a nice hammer candle here. So normally this should speak for higher prices to come. At least here for back to the 295, maybe to the $3 area. But let's see, for now it's just a little bit red, but just a normal movement for natural gas. Just 2 to 4% movements for natural gas are just normal if you look back for the previous days. But here we had about 12% movement. So yeah, it's not for nothing that natural gas is a widow maker. Because of these weird moves we had here, I was able to close my short puts right here at $10.12. Then I hopped onto a short future at $3.15 over the weekend, and I closed on Monday night when the future market opened again at $2.88. A little bit too early if I look back, but it was a nice profit of more than 5K for 2 short contracts. And then I went out of this short future and stepped back into a short put. So you have seen it, it was a 225 strike, so sitting here and still some time to run. It's in the green already because implied volatility went back and 2 days passed by. So Theta Decay and Vega are in my favor. Delta is not, so we are a little bit lower than where I entered the trade, but it's still looking good. Of course, we can retest the lows here again at 230, but I think we will see higher levels here again, and we are still trading around these exponential moving averages. As you can see, 20 EMA and 9 EMA are sitting here. So let's wait and see where today's candle will close. The day's candle of yesterday is telling us it's a little bit bullish. It's a hammer candle, but it can always be wrong. And as soon as we are making lower lows than the low of yesterday, I will be out of my long future, but I will stick to my short put with $2.25 strike. Let's see crude oil. Crude oil was interesting yesterday. We had a huge push down yesterday. So here you see all the fear for higher interest rate pushed down 4% from high to low, 4% move. This was a nice candle here the day before yesterday, but then we had the rejection here right at the top, the previous top. You can see this acted as a resistance, and then we pushed back pretty harsh. So there's still some room if we go back to this smaller uptrend here from the previous two low points. There's some room back to the $75 area. But yeah, we went out, as you can see, this was a triangular, and you can see we went out of this triangular and then we pushed really harsh here to the upside, but now went back again. So we will have to wait until we break out to the upside or to the downside. I have no trade here for crude oil right now. Then let's see orange juice. Orange juice is, see this on a lower time frame, like 15 minutes. Pushing back a little bit, that's good for today. I'm still in my short position here. So yesterday we pushed higher a lot, closed this previous gap here, and then closed lower. So let's wait. I want to be out of half of my position here at the previous lows at 223 and hold the rest for the lows here of $2. Then sugar. Sugar is here. So for sugar today it's about break even, but in the previous days we were rising, as you can see, but we are probably trying to make a bottom here, or not a bottom but a top here, and then turn around. But sometimes it takes some days until we clearly see that this is a top. And now we are entering the bearish seasonality here, beginning I think it was yesterday or the day before yesterday. So it should soon turn to the downside, or at least correct a little bit from this from this uptrend here. So I'm in a smaller short position here for sugar. Want to take out half of the position size here at 1960 and hold the rest for lower levels. Then let's see, Tesla is interesting. Tesla is making lower lows now. We are trading outside of this sideways trading phase now. So today will be really interesting. If the market stays weak and Tesla is weak, then probably we will close below the previous lows, and then you see that the support is cracked. So we will probably see lower lows here, next target 170 and 157. And if we just look at the normal trading hours without outside trading hours, we see that there is an open gap here, a huge gap. So we can even see $145 to close this previous gap here. So there's minimum, I would say minimum to the 50% Fibonacci level at 157, but there's even more room here back to the $145 area to close this previous gap. So if we close below, and if we close the week below especially, so closing Friday below 185 would be perfect for this short setup here. But maybe if the markets turn to the upside, we will get a second chance to enter here this short trade at 194, 195, whatever, or enter a bear call spread trade. So if you don't want to short the stock, then you can also trade it with options. No investment advice like always, but because I'm mainly an option trader, I like to do these option plays here. Yeah, the implied volatility is a little bit lower for Tesla, so maybe it's even more interesting to take on a long put, so buy a put instead of selling a call or a bear call spread. So buying a put can also be interesting when the implied volatility is rising and the market is dropping. The only thing working against you is time, because time won't be in your favor when you are buying puts instead of selling calls. Okay, back to Nasdaq. We hold the levels, so you can see why it is important to draw all these lines, because you see this is a supporting area, and even if the news were bad, we were able to fight these levels here. it's not really bullish now. You see that the market has its difficulties to go higher right away, but we need more volume. So we will have to wait for market open to see more volume and more news, of course. At 10 a.m. we will have the job opening and Jerome Powell speaking, and then we'll probably see more and clearer direction. So I would wait for a break above the pre-market highs, and then we can see more uptrending here. I already have an position, a long position, therefore I don't want to get in a bigger position. I think the overall trend is still short, so if I want to swing trade for a longer term for several weeks, I don't want to stay in the March future, because you see it's expiring March 17th, so I will have to go on June future, and therefore I don't want to hold these positions too long. I will probably close them today at the closing or at the latest tomorrow, and then look for another short trade for a longer time frame for over several weeks, but I want to see higher price levels to take on my short trade to have a little bit better risk reward margins here. Okay, gold is also interesting. Gold pulled back a lot yesterday because of the higher interest rate expectations, so this was pretty interesting to see gold pulling back about 2%, so that's pretty rare. Okay, we have seen it here in the beginning of February when the interest rate expectations were rising the first time, so over 2 days gold was pushing back 4.8%, but yesterday it was 2% on 1 day. So we almost reached the previous low points here. If the interest rate expectations are shifting back now, then there's some upside margin for gold, but if the fears are rising, then probably we will see lower gold prices. So let's go back to the expectations, and now we see 80.8%. So just 1 percentage point higher than before the news, but you see the fear is there for higher interest rate expectations, and therefore the fear in the market will stay until Jerome Powell will be a little bit more dovish. Let's see if he will say something today. I don't think he will. But yeah, he's more politician than the politicians, but he has to be as a chairman. So yeah, it's just like every word he is saying is like on a gold balance, and therefore he has to be cautious what he is saying, because the markets are really nervous right now and are reacting pretty fast on every word he is saying. Okay, what else do we have? Yeah, US dollar, Japanese yen. Let's go to the currencies. So we had a stronger US dollar, of course, because of the higher interest rate expectations. So the US dollar was getting stronger and bringing our level here, yeah, almost in the zone. So still a little bit of room to go back into this resistance zone here, but probably next week we will be there if we will see the same moves we have seen the weeks before. The same for Euro USD, just in the other direction. Euro USD, where's my chart here? So we pulled back a lot yesterday. Look at this, 1.2% yesterday lost the euro, and the US dollar was getting stronger. So we retested the lows today, even got a little bit lower here, but we still have some room to go back to parity. This is what my expectation was when we hit the $1.10 level. You can see how the important psychological round levels are working. We had the 110 here on the first attempt, then we triggered some stop losses here above the 110, and then we had the sell-off, big sell-off here. Yeah, it's like always, this happens always. A lot of stop losses are placed right here at the 110 or right above, and then as soon as these stop losses are triggered, we see the sell-off again. So in the long run, all the currencies are fundamental things. So if the economy is getting stronger or getting weaker, then we will see this in the currency pairs. So what is happening here now is the higher interest rate. The higher interest rate makes the US dollar more interesting for investors who want to buy, for example, bonds. So they are requesting US dollar instead of euro, and they are selling euro to get the US dollar, and this weakens the euro and strengthens the US dollar. And the more the interest rate expectations go to higher levels, the more the US dollar strength will rise here. Yeah, let's have a look at the DAX. So DAX is still near the previous high points. As you can see, 0.5% in the green right now, almost at the highs of yesterday. And yeah, not a lot missing here to retest the all-time highs, just 3.8% to go back to the high points. So still some strength here for the European markets. Okay, do you have other stocks you want me to analyze? Then just write them down in the live stream chat and I can bring them up. There's one other commodity I'm looking at right now. Here, this is wheat. So wheat went down about, 14% in the previous month of February from the previous high points here. But now, there was a good crop, and probably the Ukraine can export more wheat if the Russians accept it, and therefore the prices are dropping right now. But if something went wrong and the Russians do not want that the Ukraine is exporting more wheat, then the prices can go up, can rise pretty fast here. So I'm just looking, I'm not in a trade right now, but maybe I want to trade it to the long side. The volatility is not really high, so it can be interesting to trade with a long call, not with the future directly, because you have the risk to the downside. With a long call you have less risk, but you have a lot of opportunity to the upside, especially in terms of implied volatility. So if the prices are rising fast, a lot of implied volatility will get back into the option, and this will also push the prices higher together with the delta when the prices are rising. So I'm watching it, it's on my watch list. Let's see where wheat prices want to go to. Back to, we were talking about Nvidia. So it's a red candle right now. So the first red candle we have seen for several weeks now. This is a weekly candle, but the week is not over yet. We still have today and the next 2 days, so it can still turn to a green candle. But we were talking about it in the previous week, and I said 243 could be an interesting high point, and we were at 242.50, so we almost reached it. So if it's the first red candle, it could be a first sign of weakness, but I wouldn't short it right away. Just wait for a little bit of more confirmation, because you see the last weekly candle was a hammer candle. So this could also be that we will overshoot the previous highs here, but the overall market is a little bit weak, and therefore Nvidia is also a little bit in the red this week here. Back to Nasdaq. Nasdaq rising right now, and you see bad news sometimes are not as bad for the market because it was already priced in. So we had a lot of bad news and higher interest rates priced in at the end of the trading day yesterday, and therefore we are just fighting these low levels now. And as long as the news are not worse than expected, then the markets have no need to go lower. So of course the expectation wasn't met today. We were lower. We were higher with the non-farm employment change. Therefore this was bad news. But this number is not from yesterday. So we see this number 1 week before, and therefore there can be a whisper estimate. And this whisper estimate was a little bit higher than the 200K. And therefore we have to compare with the whisper estimate from yesterday, because sometimes these estimates can change pretty quick, like you've seen yesterday, the estimates for the interest rate level. Big shift, and therefore we always have to compare what was already priced in, and priced in is always the whisper estimate, so the newest estimates. And here we just see no more negative reaction from the market. So I'm curious where Tesla will end this trading week. Maybe we will get one more opportunity to short it here. 194, 195 is the level I'm looking at, and I want to trade it with an options play. So I probably will take a long put trade. Let's see if I will take a 165 or 160 strike with about 60 to 80 days until expiry. I think this would be ideal. So there's about 1 month to pull down here to this level of $160 or even lower. and then these puts should print when the implied volatility is going higher and the prices are coming down. And I would still have some time left in this option, so there will be some time value left, and I can sell the option for a higher price, and we don't have to go below the strike level. Okay, hope you had some nice insights. You will make some decent profits today. Let's see how the next news with Joel's job opening will come out. And yeah, if I have the time, I will live stream it again. But let's meet us Friday at the latest for non-farm payrolls. So if you haven't done so far, please subscribe to my channel and like this stream here if you had some nice insights. Wish you some good profits. See you later.